This may sound like realtor spin to some of you. If your mind is made up that it's a terrible time to buy or sell, this isn't going to change it. However, if you're in the group of folks who would like to move but aren't sure if that's like totally foolish or not, maybe this will help offer some perspective. In the past, during other softer real estate markets, yes, this is not the first one in the history of San Francisco, I have blogged about how it's actually smart to trade up in a down market. It's widely regarded as investing wisdom that you make your money on the buy, which basically means that the purchase price of an asset is the single most important factor when it comes to your end of the day profit. However, in residential real estate, most regular homeowners, not professional investors, focus more on the value of the home they are selling and get all tied up in knots over the decreased value in the market rather than focusing on the value of the home that they want to buy. So in my opinion, you want to look at both, the big picture. For example, if the market goes down 10% and your current home was worth $1,500,000 before the downturn, it is now worth approximately $1,350,000, a loss of $150,000. But the home you want to buy was worth $3 million before and is now worth approximately $2.7, which is a loss of $300,000. Of course, different homes go up at different rates and down, and if there's a softening of the market like we've seen this year, most real estate is affected, even if it's not affected evenly across the board. So it's often advisable to worry less about how much your current place has dropped in fair market value and focus more on whether or not there is a value to be had in the trade-up home you want. This is especially true if you want to buy a better home in a better location, because these properties are the ones most likely to jump in value when the market rebounds. Okay, so what about the effect of the higher interest rates? One of the lenders we work with, Susan at Wells Fargo, sent us this example about why it might make sense to buy a home with today's higher interest rates instead of waiting for rates to come down, as many buyers are doing. Basically, she is saying that you will save more money on the lower purchase price even after accounting for the higher monthly interest payments than waiting for rates to come down. Because as rates come down, more buyers will jump back into the market, causing prices to go up. So here's her example. In 2020 or 2021, a home listed for, say, $2.3 million likely sold in the $2.6 million range or higher. With 20% down, the loan of $2,080,000 was a monthly payment of close to $8,000. In 2023, the same property listed for $2.3 million is likely selling in the $2,350 range. With 20% down, the loan of $1.880 is a monthly payment of roughly $12,500, which is a $4,500 a month difference. If you take that $4,500 a month difference for the high interest rate and you times it 36 months or 3 years, then you've spent $162,000 over that 3-year period based on that higher interest rate. And that assumes it's going to take 36 months to get to lower rates, which is pretty conservative since most predictions are really in the 1 to 2 years for interest rates to come down. But if you saved $250,000 on the cost of the property, plus another $9,000 in the lower property taxes, you're still in a better position than if you had purchased in 2020, 2021 with low rates. And your appreciation is likely to be greater when the market fully recovers. Again, this isn't going to change anyone's mind who feels that sitting on the sidelines is the smart move right now. And many would-be buyers do feel this way. We all expect demand to increase as rates go down. And of course, you have to be able to afford the higher payments, which is not an insignificant factor. But if you've been kicking yourself for not moving a couple of years ago, maybe this analysis is some salvation for you. As always, please reach out to me to discuss your particular situation and come up with a plan. Thank you for watching, and I'll see you out there.